Good day, guys. How are we all doing? I hope we are all good. So I'm back with the book Market Structure and Powerful Setups by WadeFX Setup. So we are currently on chapter 6. So that's the one which we're going to be going through today. So we'll be going through some of the most powerful setups. So it's basically like a compilation of everything we've gone through so far, I believe. So we're going to be touching on the Teto soup setup. We're going to be touching on the stop hunt, break of market structure, return to order block setup. We're going to be touching on the failed swing, break of market structure, return to order block setup, and we're going to be touching on the accumulation, manipulation, and distribution setup, which is one of the things which we touched on the previous setups. So special shout out to Wade for allowing us to go through this book. It's a good book for anyone who's day trading, anyone who's sort of struggling with trading. This is actually a good book which you can use to make your journey a bit more exciting or to make your trading profitable in general. So let's quickly check where chapter 6 starts. Okay, there we go. Okay, so we're going to start off with chapter 6, powerful setups, Teto soup. So this is one of the setups which the author gave us to go through. So we've got the Teto soup. The Teto soup is the same as the stop hunt. It is a movement used to neutralize liquidity or stop losses. It's a false breakout above or below a zone where there is liquidity. Teto soup short or TSS represents a short setup. It's a false break above a zone where buy stops liquidity or BSL exists. So basically a short is a sell. I think we went through this on probably the first chapter. To short something is simply to sell something. Then if you're going long on something, it simply means you're buying. So a Teto soup long or TSL represents a long setup. It's a false break below a zone where sell stops liquidity exists. So how do we trade this Teto soup? The price usually sweeps 5 to 20 pips, even more sometimes, above or below a point where liquidity exists. After the price sweep the points, enter a trade against the movement used to sweep the stops or the liquidity with a minimum of 10 pips stop loss in lower time frames. So that means a buy side liquidity rate, which is called a Teto soup short, and a sell side rate, that's a Teto soup long. So I think here there was a bit of something which I need to just touch on. So the price usually sweeps 5 to 20 pips, even more. This depends with the asset you're trading. So to have like an average, this is just like an average number. So if you're trading something, let's say, for example, you're trading Euro USD or whatever you're trading, what you want to do is you want to back test all these setups which the author gave us. You want to back test and see that when the setups form, what's the average stop on the particular asset you're trading. So based on the volume in the markets these days, like with the tariffs and the trade wars, you'll find that the average daily range, sometimes it has increased. So you might find out that the range of your stop loss might be slightly higher. So what I'll just advise you guys is to just like back test on the asset you trade. So if it's Euro USD, you just back test. But normally 5 to 20 pips is all right for Euro USD. But if you go like maybe to GBP USD or GBP AUD, the pound pairs, sometimes you might find out that you might need to have maybe a slightly bigger stop loss, maybe 10 to 25 pips or 10 to 30 pips. You just need to do your due diligence and just back test so that you can familiarize yourself with the range of the particular asset or assets which you trade. All right, so a Teto soup short or a TSL. So this is your basic market structure. What you want to identify is a high whereby you'll be finding your buy side liquidity on that area. So each time price is moving, let's say we're moving up and it's a session or it's a day, wherever the price is doing a swing, you just want to mark that level so that when price comes back and does something like this, you identify that as a liquidity sweep here or as a stop hunt, or let's just put it simple, as a Teto sweep setup or a Teto sweep sell setup. And then you have to just measure 10 pips to the top of the second leg. So this is your first leg. This is your second leg. All right. So you always want to put your stop loss at least 10 pips outside the last high. Usually that's the safest. That's the safest. But with the way I personally trade, I'm going to try and explain how I do my own stop losses. But this is the safest stop loss, which is here. So if you follow this according to this book, according to the author, if the setup is valid, price will not take you out. It definitely won't take you out because most of the times they won't come back to this high. They won't. So this is an example of how the market structure will be looking on a Teto sweep sell setup. So your stop loss, you put your stop loss, your entry is usually here after you've confirmed that this is actually a liquidity sweep to this high. So when price comes back below here, that's where you're looking to have your entry and your stop loss goes all the way up here. All right, so that's a sell example. So the author also explains this X you see, it simply represents that zone either has to be, since we are selling, it has to be either the previous day's high, it can be the high of the day. So this is what we call variations. Variations, right? So it's not always that you're going to get price reacting of the previous day's high. Sometimes it might react off the high of the day. So this will be the initial high of the day, or it could be the previous day's high, or it could be any old high or equal highs, which simply means it could be something like this, that's equal highs. Then that will be your Teto sweep. So if you get a Teto sweep like this, your stop loss will come 10 pips above the zone. Your entry has to be after the price is confirmed that this was a liquidity sweep. So a Teto sweep short, this is the actual chart illustration, mainly visible on the M15 time frame. So if you're a day trader, pay attention to the time frames you trade on. Pay attention to the time frames you execute on. So here we had the high of the day, which is that X highlighted above. So this is a buy side liquidity area, right? So if price comes and just takes out that liquidity, it means we are simply looking for sells. So of course you need to do your top-down analysis just to get like an advantage or to know the bias for the day. So as long as you know the bias for the day, then your trading becomes a little bit more understandable. Okay, so this is an example where we've got a liquidity sweep taking out the high of the day, and you can see sell stop loss above 10 pips above the high, right? 10 pips above that high, which takes out the liquidity. Then as long as your price is coming down, you can immediately execute your trade. You're not waiting for any other confirmation. You're just understanding this to be a buy side liquidity area is the high of the day. As soon as you see the sweep, entry, stop loss, you let your trade run. All right, so we'll try to get into the actual charts just now. Also, if you're selling from the top, let me just advise, what do you target if you're selling? Because most people struggle with the exit points. So the first thing I would advise you is whatever you're risking, the reward has to be 2 times or it has to be at least 3 times. That's the first way of coming up with a TP. The second way of coming up with a TP is you can aim for the other side liquidity area. So this is your sell side liquidity, which was the initial LOD for the day, right? Before price comes down. So you can aim for that area as a take profit point. The third thing is you can also use the previous day's low, which is the PDL, as you take profit area as well. So there's many ways to come up with these setups. As a trader, as you trade, I think, let me just say practice makes perfect. As you execute your trades, you also figure it out. But you can use some of these examples as your exit points, because you always want to figure out where your exit is even before you enter, so that you know if the risk is worth it. Okay, so a Teto soup long is just the opposite of the sell. You're simply trying to identify the low, which can either be the previous day's low, can also be the LOD, can be any old lows or equal lows. So as soon as your price like takes out that liquidity and comes back into that range, then you can start looking for buys. Then you can just measure 5 to 20 pips as your stop loss, and with your stop loss, execute your trade. So I'm not going to touch much into the buys. Just remember, whatever we explain on the short is just the opposite for buys. So here's a chart example, Euro USD M15. Again, price takes out the initial low of the day. So remember, when your day starts, when price was starting off, let's say in the Asian and coming down, this was the initial low, got taken out, initial low, initial low, initial low, taken out until we eventually set the final low of the day. So please do not get confused. The only thing you're trying to identify is these legs. So I call them legs. These legs or these price swings, they have to happen within a certain time period. It can either be during your London session or it can be during your New York session. There has to be a timing factor. If you actually want to be profitable, you need to include a timing factor into your sessions. So if you can identify the LOD with the timing factor, you get that liquidity sweep on the sell side liquidity. That's a Teto soup buy or a Teto soup long. So you take your buy. You're not waiting for any other confirmation. You've already identified the low, and most likely you would have done like your top-down analysis. So you have like a bias guiding you on your trade. So you execute, stop loss comes 10 pips below the last low, take your long. Where do you take your profits? Like I said, you want to aim either for an average of a 1:2 risk to reward ratio initially. So that means if you are risking 20 pips, you are aiming for what? You're aiming for either 40 or 60 pips on average. Some trades will pay you more. Some trades will not reach the TP. That's also something you need to know. Or you can just use the other side. So you can see here we're at equal highs. So as long as you're buying, you're now targeting the other side. Any point of interest you have on the other side is what you use for your take profit, right? So if you see we passed this, so this is where you can scale out, and this is where you can actually also target and scale out. Then if you notice price failed to come to take out the high which had been set. So your take profit has to be on point. You need to know your exit criteria on your trade. All right, so that's it for the Teto soup setup. I'll simply go into the actual charts when we finish this chapter, and I'll just group everything together. So the next setup is our stop hunt, followed by a break of market structure and a return to the order block. So it's more or less like the Teto soup, but the only difference is in this particular setup, we've got a break in market structure or a BMS confirming your direction. So not to confuse you guys, this stop hunt thing confuses a lot of people. So to just make everything simple, a stop hunt and a liquidity sweep and that Teto soup is just one and the same thing. Please do not get confused by these terms. Do not get confused. All right, so in this setup, where market makers or banks have taken liquidity, they have placed positions in these areas, and generally the price must not exceed these levels. All right, so okay, let's just continue. So how to trade the stop hunt plus BMS plus RTO. So the first thing you want to do, okay, before we even get into what the author said, you want to identify the stop hunt or the liquidity sweep. It's advisable not to take any trade whatsoever until you identify this. Then as long as you identify this, the rest of the confluences is just like an added bonus. So you identify this, the next thing you want to see is this, then this, to give you a setup. So first occurs the stop hunt. That movement is used by market makers to neutralize liquidity. Second, there is a break of market structure confirming the stop hunt. So the BMS always confirms this, right? This is a major confirmation for most things. And like the author says, you want to trade in the direction of the breaks or structure. That's how you become profitable. You simply want to trade with the trend. Okay, then third, the price has to return to an order block. So that move which breaks the structure, there is going to be an order block within this. Then you simply have to wait for price to retrace into that order block for you to be able to execute the trade, or for the setup to simply be correct. All right, so another illustration of market structure. So here again, the X is representing either the previous day low, the LOD, the equal lows, or any low which you can visibly see with your eyes. Then you identify the stop hunt or the liquidity sweep, which takes out this low. Then as the price pushes up, so remember, if you're taking this as a Teto soup, you're already executing your trade, right? And you're already taking your longs with your stop loss outside this range. That's the first thing. So if price now breaks a structure and decides to retrace back into an order block, if you had taken a Teto soup, or if you had seen this as a Teto soup, it means your stop loss is safe because it's outside the range. Price simply comes, respects the order block, then it moves. So here now your entry will be here, your stop loss will be right here. So that's also like a variation. So with these setups, you simply have to try and figure out, from whatever you've learned and however you understand price, try to use that information to come up with a setup. So this is a chart illustration, M15 on Euro USD. All right, so what do we initially have? We've got the initial low of the day, which is sell side liquidity. Then you get that liquidity sweep or that stop hunt like it's a turtle soup, which means you can still take your trade here. That's why sometimes maybe as traders you get confused, like, okay, do I trade or do I wait for an order block? If you understand this to be a turtle soup, you can still take your buy, because this setup literally played out like a 1:2, 1:3 still. It was still perfect. But then if you're able to identify this order block, then you'll see you would have taken the turtle soup on this particular day. On the next day, you would have seen that, okay, my price has come back to my order block, that RT, or the return to order block. And you could have still taken a buy here with your stop loss outside the OB. Then here you can also see you've got a nice liquidity sweep. Again, depending with how you understand price, you see here we had the initial high of the day and the liquidity sweep here. Again, you can still take a sell coming back to that OB as you take profit. It simply depends with how you are understanding price. You can literally trade both ways as long as you understand what's going on. But if you don't understand what's going on, please do not trade. If you don't understand what's going on, get in touch with the author. I'm going to drop his Telegram link in the description, or you can plug in with me and we can maybe have like a mentorship thing. It all depends with what you want, so that your journey, your trading journey, can be more profitable. So this was a bullish example. So now we've got a bearish example. So it's simply the opposite. You want to identify a high, can be the previous day's high, can be the high of the day of that actual day you own. It can be an equal high or any old high. So soon as you identify a stop hunt, the next thing which is coming is this setup. Initially, it will be looking like a turtle soup, which means this price can simply drop, right? But if you're able to identify the break in market structure, remember you always take trades in the direction of the break, but you need the retracement first. So if your price retraces back into an OB, return to OB, then you can take your sell right there, stop loss outside the OB. Because the stop hunt has already happened, most of the times price will not come up, but maybe like 2% of the times they will still come back, take out that stop and still drop. That happens. I'll try to show you examples on the actual charts. So here you see we had a high, we had a stop hunt, break of market structure by this move, then price retraces. So remember, as per first initial chapters in this book, you can still run your Fibonacci from here to here as well. Then you can wait for price to retrace into your OTE or into your Fib retracement levels and still take a trade. Everything you've learned, you simply just want to like compile it and see what is appearing like as your confluence. So if price breaks a structure, returns into an OB, that right there is a sell. And you can also use sell limits if you are confident. Just set a sell limit and your stop loss outside the range. Your first target is always this low. Like I said, if price gets there, your trade will most likely be complete. As long as it gives you a risk to reward of 1:2 or 1:3, that should be perfect. Then the third setup is a failure swing or failed swing or an SMS followed by a break of structure. So in place of a stop hunt, we've got a failed swing, which means the market structure is almost the same thing. But the thing is, prior to the BMS, there is a failed swing. So when price fails to break a top or bottom, it shows that the trend is ending and a reversal may occur. Wherever you see this, just know that that's the valid point to take away from that particular setup. So how do we trade a failed swing plus break of market structure plus return to order block? So the first thing is, first, the price fails to break the top or bottoms, right? Then the second thing is you want to identify a BMS, confirming the failed swing. So to confirm that price has failed, right? So let's say price was coming up, right? Then we do this. Once you identify this high and you identify that there's no stop hunt happening here, but my price is already in motion to come down. To confirm this as a failed swing, price has to break this structure. So you need that break, right? Then if price retraces, then you can look for a sell. So first, the price is to fail to break a top or bottom. You have to identify a break of structure. Then the third thing is price has to return to the order block. Okay, so let's see the illustration. So this is like a visual illustration of the buy setup. Price is coming down. This leg here fails to take out this low. Then as price is pushing up, we break a structure. Now we've got a setup. So as the setup is forming, the order block becomes our point of interest. And if price comes there, you simply execute your trade. So a bullish setup will be looking something like this. Here we are on the 1 hour time frame, same asset, Euro USD. So what we identify here is we identify that we had a downtrend happening here, lower lows, lower highs, right? Then what ended up happening is the next leg, which was supposed to create a lower low, failed to take out this low. That's where we say the setup is now forming. Then from there, price breaks a structure. Setup is now in full swing. The only thing now you need to identify as a trader is the order block. If you can identify the order block, perfect. If you can run your fib as well from point A to point B, then just use those Fibonacci retracement levels in here that help you to come up or to confirm setup. So if you hit the OB and price is also respecting the retracement levels, it's game over. You're expecting price to start expanding to the top side, creating higher highs, higher lows, higher highs, higher lows, until the trend, of course, shows something else. A bearish SMS, again, is just the opposite of the bullish one. Price fails to break a high, we break a structure, we return to the order block, and we sell. A live illustration is here. Price was simply pushing up. When we got here, instead of doing this, price failed to take out this high. So that's a failed swing on or an SMS, but we are not selling it. We need a confirmation, which comes in the okay, English is escaping me, which comes in the form of a break of market structure. Soon as you break your market structure, you want to trade in that direction. So now you want to identify an order block. And soon as price gets in there, that's your entry. You don't really have to wait for anything else. All you have to do is execute. That's why I was saying you can attempt these type of setups with sell limits if it's a sell. So sell limit, stop loss outside the order block, and price triggers. We play around that area a bit. We drop. We are targeting the other side as a TP. So price went sideways for a while until we eventually started to melt. The last setup is accumulation, manipulation, and distribution, which is AMD. This we spoke about it on the last chapter. If you haven't yet gone through the last chapter, please go through these examples which I did. So I'm not really going to touch much into this, but I'll just go through it. So how do you trade your AMD? You want to identify accumulation, whereby your price is ranging. Then you want to identify the manipulation, whereby the price will break the range, which is the accumulation part. Once you get the break of that range direction to trap the traders, then we anticipate the distribution. So on distribution, this is where price will go against the manipulation. And here you look to go long or short, just depending with what you're seeing. So this is simple RTOs, stop hands plus BMS plus RTO. It's basically all the setups which we have explained above there. So bullish AMD, simple market structure, just like we explained in the last chapter. You want to identify this, which is usually the Asian session, right? So we're assuming this is an M15 chart. So that's your Asian session. Then London opens with a manipulation, and soon as manipulation is done, we get a distribution. All right. What's next? What's next? So that's an illustration of the actual price, excuse me, accumulation, manipulation, then price starts to expand to the top side, right? We start to expand to the top side. So you can see price fails to take out this low. That's an SMS. Price now expands to the top side. That's a BMS. We retrace, we fail to tap into the OB. We expand again, which means someone who was just viewing this, let's say as any other setup could have still taken a buy and made profits. Someone who's waiting for price to retest the order block can still wait for this trade and get a setup. So this might happen in NY session. This might have been London session. That's why I said you always have to pay attention to the timing factor. You honestly need to pay attention to the timing factor. Okay, so chapter 7 is putting everything together. I think that's where we round up. That will be our last session or our last lesson. So let's quickly jump into the charts. Let's see what we have. Without going too far, we do have a setup here on gold, whereby price was dropping. We set a low. We start to break structures here. We retrace into an OB. So this is a quick retracement. You simply need to understand what's happening. Like I said, if you are unable to view the structure, turn your chart into a line chart so that you can see these levels. So let's quickly just do this. So now you see we've got these structures as price was coming down. Then we broke a structure. There's an OB here, which you can use. Price retraces. There was another confluence here, which I won't really mention because I don't want to confuse you guys. Then price eventually played out. So the purpose of opening these charts is just to show you that these setups actually happen. The same way the author is doing like a structure and then an illustration. This is just a sign that these setups, they do happen and they are there on our charts. We simply have to be patient enough, and we simply have to just back test so that we familiarize ourselves with the variations. Remember, most of these setups will not happen as per textbook. There will most likely be variations because remember, markets, they evolve. The concept is the same, but there's going to be certain variations. I'm going to show you an example of what I call a variation. So if my price is coming down like this and I can identify this high, then before my London session, I can identify this. This for me can work as a stop hunt or as a liquidity sweep because we've literally taken out this high. after we took out that high with the liquidity sweep, that can be a Teto sweep sell with my stop loss here, and I can be profitable with that particular setup. Why am I profitable here? Because I'm understanding what's happening. You also need to understand that if you can be able to identify a trend, sometimes price will take out liquidity before continuing with that trend. If you can just simplify it like that, I think it will simply make your trading a bit easier. So here we've got a stop hunt. We do have an order block which is not really retested by, but price still expands to the bottom side. Here we've got a low of the day. Price pushes up. This is almost a failed swing, but I'll say this is the better failed swing. You can also look at this as a level where you get your stop hunt or liquidity sweep just based off this structure here. But then this becomes a little bit more advanced. It's for people who are a bit like used to market structure and price movement. But I'm sure you guys understand the point here. Like, if it's like this, if your price is pushing up, sometimes you get price taking out liquidity before it continues, takes out liquidity before it continues. So if you're able to identify all those areas where you feel like it's a liquidity sweep, you can still work with that price action as a Teto sweep as well and simply execute your trade there and aim for the next levels as your TPs, as long as you understand what's going on. And especially if these swings are happening on points of interest from higher time frames. So from my charts, you can see these are zones which I mark from higher time frames. We get a reaction. Then we now look for the simple default factors of coming up with a setup, just like we read from the book. Let's see if there's any other visible example which I can show you here. Okay, we do have the initial low here. This is New York session. New York comes, takes out the low. Soon as you take out the low, what's the next thing? You understand that it's a Teto sweep. So you can still take a buy here with the stop loss outside the range. That's the first thing. Then if you break a structure, that's where now you want to identify an order block and stuff like that. So it's variations. It's variations. Sometimes you see a stop hunt. Sometimes you see a Teto sweep and the setup will simply play out. Sometimes you see a failed swing, then the setup will play out. Sometimes you see something else or AMD. So it's all about diversifying your skill and what you've learned and familiarizing yourself with these setups so that you can be able to see all the variations and catch the trades without actually missing them. So let's see if there's something on German 40. German 40, German 40. If we look to the left, slightly to the left. Okay, we had the initial high here. Price comes, takes out this high. One other thing I want to mention is on these stop hands or these liquidity sweeps, personally, I prefer seeing candles with wicks. You get it like this, for example. I wouldn't consider this a liquidity sweep. I would rather wait for a candlestick with a wick like this and my timing. So you see, this is happening within my trading time. That's the liquidity sweep I want to see. So now this was now the initial high. So as long as I'm happy with this liquidity sweep, my stop loss is 10 pips above my highest high, which means if I'm entering here, my trade is safe and I can simply hold until it plays out. That's one way of looking at it. So you can trade it as a Teto sweep. You can also trade it as a liquidity sweep and a break of market structure right here with this push, then price retraces back into an order block. So you want to identify which level you're using as your OB. If you don't understand OBs, there's a chapter above which we went through, which speaks on OBs. So I won't get too technical about order blocks. There's also variations to the order blocks. So you just have to use your own like discretion. So setup plays out. Identify something familiar, execute your trade. Again, another example here where this low price pushes up, comes down. So you can take this as a failed swing as the trade is happening within my trading time. if this was a failed swing, what do I want to see? I want to get a break of market structure and a return to the order block. If I get a return to order block and I can understand it and I can see it visibly without stressing or without struggling, then I can execute that trade. So what I'll try to do is in some of my trades in the future, I'll try to maybe take a trade and mark my charts, then I'll drop it under this playlist so that you can see the actual trades. Because sometimes when we backtest like this, it feels like it's easy to spot these setups, but it's actually hard. So in live market conditions, it's pretty much hard because you also have your emotions involved in that trade. Another example here, we had this low, we had a liquidity sweep here, we had a break of structure here. This is our order block, return to OB, and a push up. We are aiming for this high as a TP. Price gets there. Remember, session timing. This is my London session. This is my New York session. This is my New York PM session. So that's why my charts are marked like this. So it's all about understanding what your price is doing. If you've got anything familiar, you can execute. If there's nothing familiar, there's no need for you to force trades, right? Again, here we've got a downtrend which was already happening. We identify a liquidity sweep. We have to identify a break of structure. You might take this as a Teto sweep with a stop loss above. Still fine. You can take this as a liquidity sweep, wait for a break of structure, then a return to order block, and you can still take the trade. You see, there's many ways to approach these setups. So you just have to choose what works for you or choose what you can easily identify with your naked eyes without stressing much or without like squinting and stressing much. Anything which stands out to you, you simply have to mark. So I advise you guys to mark session lows, session highs. That helps you come up with a setup. Sometimes you might get something like this. Then if you notice price fails to break a structure, that means maybe you might have seen this as a turtle soup. It will fail. Some trades will hit the stop loss. That's why we always trade with stop losses as well. So it's not every trade which will play out, but if you are patient, most of the trades you take will play out. You might take more losses and less wins, but also if your risk to reward is perfect, you still be a profitable trader. So I don't want this video to be too long. I think I've tried to explain most of the things to the best of my knowledge. If anything was not clear, please feel free to get in touch with the author, WadeFX. I'll drop his link in the Telegram. Um, I'll drop his Telegram link on the description. Then if you also want to get in touch with Wade, these are his handles. So he's the author of the book. This is his Twitter handle, WadeFX Setups. This is his IG, Wade_FX_setups. And this is his Telegram channel. You can simply get in touch with him. I believe he can explain this book or this strategy way better than I am because he's the author, he's the originator of this strategy. But if you also need help from me with the way I trade, because if you notice on my charts, I also have the session timing boxes. I've got the TDI, I've got the EMAs. Then you can get in touch with me, plug in. I do have a free group. I do have a free WhatsApp community, and I do have the paid mentorship community, including a course as well. So you can get in touch and just use and do what works for you. And I wish you nothing else but a profitable year and a very consistent and profitable trading journey as well. So we'll come back and finish off chapter 7 and the rest of the book, and we'll do a quick review. And you guys, maybe you can tell me what you think about the book. Is it working for you so far? Are you still struggling? It's pretty much simple, and I believe everybody can be able to be profitable if they use and follow everything in this book. Of course, with backtesting and practice. So if you watched until the end, thank you so much. Enjoy the rest of your day. Good trading.